You know that specific moment on a Sunday afternoon, opening a bank statement that arrived the week before and sat unopened on the counter, and finding, somewhere in the middle of the page, a charge you don't recognize? Not a large one, never a large one, just a monthly maintenance fee, a streaming service that renewed 6 months after you stopped watching it, a minimum balance penalty for a balance that was $2 short on the wrong day. And instead of moving past it the way most people do, you stop. Not because it's a large amount, because it's an amount you didn't agree to. And small amounts you didn't agree to have a way of becoming permanent if nobody ever asks about them. You write down the number. You call the number on the back of the card, and you ask, with genuine interest and no particular urgency, exactly what this charge was for and whether it can be reversed. Sometimes it is, sometimes it isn't. Either way, you asked. While somewhere across town, the same charge cleared on 10,000 other accounts today, quietly, and not one of them will ever ask about it. Here is what almost nobody calculates about the fees on their bank account. The Consumer Financial Protection Bureau estimates that Americans pay more than $15 billion in overdraft fees alone every single year. Not 15 million, not 100 million, 15 billion, collected from accounts that were, in most cases, only overdrawn by a matter of hours, or by amounts smaller than the fee itself. And overdraft fees are only part of it. Monthly maintenance charges, minimum balance penalties, paper statement fees, ATM surcharges on machines that belong to a different institution, wire transfer fees, inactivity fees on accounts that were simply not used enough to justify their existence. The average American household pays over $300 a year in bank fees. Over a decade, that is more than $3,000 paid to the institution holding the money for the privilege of holding the money. The system is built on the assumption that most people will not check, that the statement will be opened late or not opened at all, and that the line item will scroll past unexamined, the way it always has. And the savings side of the arrangement compounds the problem. The bank earns 6, 8, 10% lending out the money deposited, and pays back a fraction of 1% in return. The gap between those two numbers is not a coincidence. It is the margin the institution keeps for running the arrangement. Nobody at the bank explains this to you when you open the account. You only meet it later, quietly, in a statement that was designed to be comprehensive enough to look legitimate and specific enough to be almost impossible to read quickly. There is a name for why most people never check. Psychologists call it status quo bias. Research by Daniel Kahneman and Amos Tversky showed that people systematically prefer the current state of affairs to any alternative, not because the current state is better, but because the brain treats it as the neutral reference point. Changing requires effort. Staying requires nothing. Bank fees are invisible precisely because they were always there. They arrived before you were paying close attention, embedded in a document signed once and never revisited, part of an arrangement that became background noise, long before it became a cost. Questioning a bank fee is not complicated. It is simply not the default. And the brain resists departing from defaults even when departing would clearly benefit it. But the bias isn't the whole story. There is a second force, the one that makes noticing feel disproportionate, almost finicky. For decades, the cultural assumption has been the same. Small recurring charges are simply the cost of modern life. Subscriptions, fees, surcharges, they accumulate below the level of attention because the individual amounts are small enough not to justify the friction of doing something about them. The person who notices a $12 maintenance fee and calls about it is not being careful. They are, in most social contexts, being slightly difficult, treating something trivial as though it mattered, when clearly it doesn't. But $12 a month is $144 a year. And the cultural permission to ignore small recurring costs is not accidental. It is the specific condition that makes small recurring costs sustainable as a business model. For banks, for subscription services, for any system that depends on inattention at scale. And the numbers have been making the argument for years. The average savings account pays its holders less than 0.5% in interest, a return that in most recent years sat well below the rate of inflation. Meanwhile, the institution holding that money lends it out at 6, 8, 10%. The gap between those two numbers is not a service fee. It is the cost of not paying attention to what the arrangement actually is. 3 forces. A brain that treats the current arrangement as neutral, even when it costs money to stay. A culture that reads questioning as impolite rather than intelligent. And a number, every year, quietly proving that the people who asked were right to ask, every single time. It was there the first time a fee was successfully reversed, not because there was any great argument made, not because anything dramatic happened, but because someone simply asked, calmly, on a Tuesday afternoon, and the person on the other end of the phone had the authority to say yes, and did, and that was the end of it. 15 minutes, the fee gone. No argument, no drama, just a question that most people in that same situation had simply never thought to ask, and the slow realization, sitting there after the call, that the question had always been available. It had just never been asked before, by anyone, including the person now holding the phone. It was there the afternoon of adding up 12 months of statements, line by line, for the first time, and arriving at a number that had never appeared anywhere as a total, had never been summarized in a single figure, had always been spread across 12 separate documents in amounts small enough to scroll past without stopping, and understanding, finally, why. It was there, the moment of switching banks. Not dramatically, not as a statement, just methodically. Because another institution had better terms on paper, and worse terms had been accepted for long enough. And realizing that the switch took less time than the fees had cost in a single calendar year. It was there, in the specific, quiet satisfaction of canceling a subscription that had been renewing quietly for 8 months after the last time it was used. Not in anger, not as a dramatic gesture, just because the statement revealed it, and revealing it was enough to end it. These are not people who distrust banks. Most of them have accounts, use them regularly, and have no particular ideology about financial institutions. What separates them is not who they bank with. It is that they extend the same level of attention to a $12 monthly charge that most people reserve for a $1,200 purchase. They are the person who, when a fee appears on a statement, picks up the phone instead of scrolling past. Something close to this. I noticed a maintenance charge on my account last month. I'd like to understand what triggered it and whether it can be waived. That is not someone difficult to deal with. That is someone who understood, early enough, that small charges treated seriously have a way of disappearing, and small charges ignored have a way of becoming permanent. They know, within a reasonable margin, what their banking costs them per year, not as an abstraction, but as a number they arrived at by actually adding it up, at least once, and found worth tracking because what was found was not small. They also apply the same logic beyond banks. The subscription that renewed automatically 6 months after they stopped using the service, the streaming platform added during a free trial that never quite got canceled, the gym membership charged monthly for a year on the assumption that the inconvenience of canceling would always outweigh the inconvenience of continuing to pay. They are not suspicious of banks. They are simply not passive about small costs that nobody else is watching. And the very next time a fee appears without any clear explanation, that habit already has the response ready. Now, finally, the objection. The fees are small, it's not worth the time, the bank is just going to charge them again next month anyway. You're spending an hour to save $12. This is not about switching banks or turning a $12 charge into a political statement. If the fees are genuinely manageable and the relationship with the institution works, nothing here is arguing for something more complicated. Every arrangement has its own terms. This is about the specific habit of reading what you're agreeing to before and after you agree to it. And the time carries less weight than the objection assumes. A single phone call to reverse an overdraft fee takes, on average, less than 15 minutes. And banks reverse fees for customers who ask far more often than most people realize, because the cost of losing a customer to a competitor consistently outweighs the cost of waiving the charge. At $300 a year in fees, the return on 15 minutes of attention is higher than most financial decisions will ever offer. And it compounds, because the fee that gets waived once rarely returns the same way twice. The people who never ignore a small fee are not making their lives harder. They are simply refusing to fund an institution's revenue model with their own inattention, simply because everyone else pays without looking, and the system was designed to depend on exactly that. Here is what most people get backwards. The person who never checks their statement is not saving time. They are subsidizing a revenue model built specifically on the assumption that they won't. Every unchallenged fee is a small vote of confidence in a system that did not earn it, cast not out of trust, but out of the friction of having to do something slightly inconvenient on a Tuesday afternoon. Most people know their rent, their car payment, their phone bill, but not what their bank charged them last year, because that number was never presented as a bill. It was presented as a series of line items spread across 12 months in amounts small enough to ignore individually and significant enough to matter collectively. That number has a name. It just never appeared on a single page where you could see all of it at once. Run it across 10 years, and the number that was never presented as a bill becomes one, quietly, in arrears, without a single statement ever showing the total. And the person who found it anyway and acted on it is not difficult. They are simply paying attention to an arrangement that was designed to be paid for without being looked at. There is a moment people who never ignore a small fee all describe in almost the same way. It is not the first reversal. It is not the switch to a better account. It is an ordinary month opening a statement that arrived 3 days ago, scanning the line items the way they always do, and finding nothing unexpected. Every charge exactly what it should be. Every fee either absent or accounted for. And feeling, in that specific, ordinary moment, something close to nothing, which is precisely the point. Not relief that nothing went wrong, just the quiet, unremarkable confirmation that the arrangement is running on terms that were actually agreed to, which is how it always should have felt and how it now always does. The fee was never the point. What agreeing to it without looking said about everything else was. 10 years from now, nobody asks how much your bank charged you. They ask whether you ever once let them charge you without knowing exactly what it was for. Have you ever called your bank about a fee, and what happened when you did? Has anyone ever made you feel like checking your statement carefully was more trouble than it was worth? Drop it below. We read every single one.